Ladies and gentlemen, welcome to the Finstep Asia Edge podcast, continuing on conversations on fintech, Web3, and digital assets. With me today is a very good friend and a multi-startup founder, in the sense he's set up many startups, and a PhD, Dr. Florian Spiegl, founder and CEO of Evident Capital, a licensed firm here in Hong Kong. We'll hear more from him on what Evident does and also discuss about tokenization, talk about evolution of blockchain in financial services, and what next now that we have trillions of dollars expected to pour into tokenization and blockchain in financial services. Florian, welcome to Finstep Asia Edge. How's your day been so far?
It's a wonderful sunny day in Hong Kong.
And hot as well. Right?
Oh, I love hot.
Yeah.
As long as it's sunny.
Humid, yeah.
I had my morning run today.
Okay.
I love it. So yeah,
it's
good day so far, and great to see you in this context. And much respect to German. Spiegel.
Yeah.
That's the proper
Spiegel,
pronunciation.
I got that right, yeah. Just started with Guten Tag. I practiced it. To be fair, 9 years of practice.
Take it as a compliment.
So I want to start off with a few things where you've had this journey where you were I'm going to call you an investment professional in some senses at Credit Suisse, and before that transitioned into becoming a founder, co-founder, and then now a solo founder, right? You've had that journey broadly in the investment world, underpinned by blockchain in the later years. But let's start about what drew you to finance, right? And the doctor part of the name, right? So how did you get into your PhD? But what drew you into finance early on?
Yeah. So that actually goes back to the very beginning.
Sure.
I grew up in the Austrian mountains. I had very adventurous childhood.
Okay.
All these scars on my forehead are bearing witness, and it was great. But I grew up in nature.
Sure.
So actually, my first interest was in nature and in forestry.
Okay.
So my first profession actually is to be a forester. So I went to school. We have a wonderful thing in Austria where you can add one more year to school before you go to university. And in this spread over 5 years, you actually learn a profession.
Fair.
My profession is to be a forester.
Okay.
And that also is why I'm still connected to nature, impact investing today. But back to your question, during the school, you also cover how to run a forestry business and what sustainability means. Right? In a forest is how much you can take out economically without destroying the economic substance.
Fair.
Of the forest. So that brought me to economics in a way, because the forest is a big economic machine.
It is.
You have growth, you take things out, you have to take care of it. And I was one of the very few from that school to go on to study business and economics. But that was it. I loved, from the first day at university, I loved this space and never looked back.
So what shifted you from forestry and building trees, which have been very beneficial for the world right now, given what we're going through in terms of climate crisis? What drew you to business and economics, and just talk through the start of your career?
Well, first of all, not just useful with trees and so on and so forth, but also, you learn to hunt, you learn to fish. So if the machines take over, I feel quite okay.
You feel quite the doomsday scenario. You're set.
Other benefits too.
So I know whom to contact in the doomsday scenario.
We can hold up somewhere in the mountains in Austria.
If I can hike up that much.
But no, so for me it was, once at university, of course, you see very different pathways into finance. And my after university, my first job was in strategy consulting.
Yeah.
And I always tell young people, when I teach at university and elsewhere, if you don't really yet know what exactly you want to do, consulting is a great way to find out. So I worked at Boston Consulting Group. I did so many different industries.
Of course.
But then I always veered back to finance. And why? It's really the numbers behind it, and I would say also the complexity of systems that drew me to it. And this is where I started to do primarily financial services projects, private equity, venture capital world, banking, asset management. And then fast forward to accelerate that a bit. So my last corporate position after leaving BCG was with Credit Suisse.
Yes. Yeah.
And that was on the wealth management and private banking side. And I had a role in the end that was called digital private banking. So that's where technology came in, where I saw okay, everything will change
Okay.
with technology. And I saw that from our clients at Credit Suisse. You know, you have these theories where you say, oh, okay, this is more for the younger clients.
Okay. Yeah.
But then you interview a 72-year-old gentleman in Singapore, and he is like, okay, you know, what I'm missing is I want to be in my car to the airport, open the app, and see how rich I am, right?
Or how I'm doing.
And
Right?
we knew we couldn't give this to the client at that point, and you really need to digitalize and work with clients. So that brought me to basically corporate fintech.
Yeah.
And then the rest is, you know, quitting banking, moving to Hong Kong, starting my own company as a co-founder. And then, yeah, it's now 7 years in Hong Kong, now in the second company in fintech.
It's been 7, I thought more than that.
Almost 8 now, yeah.
Almost 8,
You're right.
Yeah.
Good memory.
Yeah. So Florian was also part of the initiation of the Fintech Association of Hong Kong, but more than that, we've probably had an opportunity a few times to do education, not just to university students, but also to professionals. Without naming this giant asset manager, the two of us had gone to do AI and investment management, if you remember, with this large asset manager here in Hong Kong. It's a global asset manager. This is about 7 years ago, right? So
this was before LLMs.
Yeah, before
this
LLMs.
Was before it was really cool.
Talking about, but because they've had wealth management, one of the earlier spaces where artificial intelligence and technology has played a part, and you can see that when the front end impact takes place. So electronic trading is 60 years old, probably from the tickers all the way to computers being used 40, 50 years, and now we're seeing all of it. Millennial Capital has been using AI for 40 years, right? So all of it is technology, and I refer to that as the initiation of non-ATM fintech, right? If you want to talk about it. Now, what I wanted to say was, you've seen that demand that came in, right? But you were working for what was one of the world's largest investment banks. Unfortunately, did not fare too well after a long history, now merged with UBS. I wanted to ask, what led you to saying, okay, here I am working for one of the world's largest firms. They were very interested in digital. That to be fair to Credit Suisse, right? And I know quite a few people there. But what led you to saying, okay, I'm going to step out of this comfort zone in a relatively new environment, which is Hong Kong is a new city, new culture, very different clientele to say where Europe is to a certain extent, and say, I will now go and co-found a startup. And I did the podcast with your co-founder a few days ago, literally. But I would love to hear your perspective. What drew you to becoming, stepping away from corporate into becoming a founder?
2 reasons, really.
Sure.
The first one is maybe more personal. You know, you reflect on your life, and you know, in a big bank in Switzerland, you could extrapolate and say, okay, this can be another 30 years of relatively plain sailing.
And comfortable life.
Comfortable life and lifestyle inflation, the whole thing that comes with it. And that's fine. But, you know, I was still in my 30s back then.
Sure.
So you say, okay, I don't want to be in a position in my 70s and 80s looking back and honestly say, what the hell did I do for 30 years? I repeat it 1 year 30 times. I didn't want to be in that position.
Okay.
And I've seen it. I took a lot from it. I learned a lot. And I had a lot to learn too.
Fair.
So it was a very important time for me. But it was time for me to take some risks. Right? And I've always been entrepreneurial. My family, my wife's family, you know, there's entrepreneurs all over the place. So it was always in me, just from a growing up and family background. Started my first company as a student. So for me, it was actually going back to entrepreneurship.
Fair.
But it was combining these two sides. It's okay. Fintech is going to change a lot in the industry, which means opportunity.
Sure.
And then I have this urge to take risks, do something new. So it was more of a big bang, you know, moving to Hong Kong, basically not yet having a plan what I will do, giving myself time to figure it out. You know, I said to my wife, now she's my wife, okay, I'm going to take 3 months and figure it out. She said, take 6 months.
Okay.
So it gave me a lot of room, and you need time to really land on what is a viable business and what you enjoy doing and what you can be good at. The typical ikigai type of questions.
Sure.
And so that was the transition really. The second reason for me was the further you move up in a corporate, in my experience, and it's not even bad will of anyone, it's just the nature of a big organization.
Yeah.
The more energy you invest in relatively non-productive things, from politics to just existing in the machine.
Yeah.
And my just theoretical thinking was, if I take that energy and put it, all of it, and so I can put 100% of my energy into building something, you might go somewhere. That was the second reason, just the different use of energy and time. And those are the two main drivers behind it.
And coming to the company itself and the product you guys developed, the products you were developing, or let's say the stream you were in, why did you choose that? Was it more to do with the co-founders, or was it more a choice of saying this idea is worth exploring and hence I'm going to do this with two other people initially and then one other person effectively, right?
Well, without getting too deep into that, and this is also my personal view and my story, right? First of all, there's a lot of things that you think are strategic or a good strategy that turn out to be bad strategy. So that was the case there for sure. But the thinking back then was maybe starting out with essentially a market need for brokerage, equity brokerage, traditional brokerage solutions in the cloud as a SaaS product. Where thousands of licensed brokers in Hong Kong, they did run and still run relatively outdated technology.
Yeah.
You just give them the package, everything in the cloud. You just pay a monthly fee. More or less. Yeah. And then you have a modern setup, a modern app. It's much better cybersecurity, much better performance, much better user experience for your clients, etc., etc. Nobody wanted it, right? It was maybe timing. It was maybe us. It was maybe our product. And by the way, a lot of these businesses are now out of business.
Because they didn't say that.
So I think the fundamental thesis was probably correct. Execution wasn't so great. And then, so we relatively quickly shifted more to the blockchain and crypto side of things. And worked on different product lines there. And that's really also, for me, was from a product perspective, was really getting into the blockchain space, which today is the foundation of evidence. So I've been into crypto before because I basically hail from the Austrian School of Economics. Right? Having studied in Vienna, and it was a very interesting concept, Bitcoin specifically, very interesting concept from an Austrian school perspective. The theory of money, Mises, Ludwig Mises, all the the giants of the Austrian school, all the way to Schumpeter. It just was very academically interesting to me. So that's really what brought me to crypto. But it was in 2013, 14, relatively early, and it was more like a just intellectual interest.
Fair, yeah.
So the practical side really came with FinFabric, where we started building systems for this space. And for me that was then another insight of, all right, this is not just nerd space. This will go somewhere. This has the ability or the potential to really bring back a lot of value to traditional finance. And again, this is very baked into our vision and mission and philosophy at Evident today. So it's all a journey, as we know.
Of course.
That part of that journey was very important to me.
I'm going to digress a little bit and go into a theme I like to talk about, especially when people understand the space so much. And it's a provocative question in the sense, I believe Bitcoin as a concept of what it was meant to be, which is peer-to-peer, disintermediated money, has failed. Bitcoin as a product has failed. What is your take on it? And I'll justify my thoughts. I'd love to know what you think of it.
Absolutely has not failed.
Okay. No, but the concept of being peer-to-peer, decentralized money has failed.
So
numbers-wise,
you could say what was the original intention and goal. Of course, it is. If you read the white paper, which I did many times,
sure,
it is about money and the means of payment and transaction. It's a lot of focus on that.
Correct.
But I don't think that person or group did not say, "Oh, it has to become that, otherwise we fail." I think there's a lot of room built into what this can evolve into.
Sure.
Especially if you also read the email conversations, the early participants. Which you can see there's a lot of Twitter, I don't really know. Here is a few hypotheses, and then typical startup mentality.
Sure.
But if you look at the reality, essentially this is basically a software of storing value, right? It's completely independent of any control, as arguably the only alternative globally, but especially in the crypto blockchain space. And it works. It's 10 plus years of
15 years almost.
15 years closing in of having worked without really any issue. It's many people participating in it.
Yeah.
And so I think you can reliably say you get the benefits. You can rely on the benefits that it conveys today. Which the first thing to me is it is really it's self-sovereign, right?
Okay.
In today's world with more conflict, more instability, unfortunately, there is value in having a store of value that only you can control and no one can take away from you.
I agree on
it's the reality of a lot of people's lives right now.
Yeah.
It might become our reality. The world is unstable, and so that is a huge value. The second thing is store of value over distance, right? So you can move it around relatively easily and over time. That's where the deflationary component comes in, how it's constructed. It is the hardest form of money that we know today. It is.
Okay.
Or hardest form of value,
Yeah,
you're worried
that's
about
the
money
key thing. I think that's the key part,
right? Worried about it.
Yeah,
you have to correct hardest store of value, and that is incredibly valuable. If you still look at how much wealth inflation wiped out, having a more inflation-proof store of value has a lot of value. But this is actually something that occurred to me early on after reading the first time the white paper. Again, from a theoretical perspective, very, very interesting. The amazing thing is that it's still here.
Yeah.
And that now a lot of people participating in it. So it's impossible to shut down, right, in my mind. But, there will be different opinions on that.
It's a fair assessment and an answer in terms of as a store of value, it is still prevalent and it's providing an alternative means for quite a few people, not just what we would say as people in conflict zones or high inflationary markets, say Zimbabwe and Argentina or El Salvador, as it was the case, right? To now you see ultra high net worths also hold Bitcoin as a store of value, as an alternative investment, and we'll come to it. But the thing that's probably what you spoke about as well is that underpinning technology has been the one that's had the most impact, which is blockchain. Although you could argue that DLTs aren't invented by Satoshi Nakamoto, they, the group, but have been around for a little while before, probably a couple of decades before. But it gave that impetus for people to try to find different ways, because you now had an alternative to transfer of money, right? Maybe not successful, but then physical money also could not go beyond certain borders. It needed to move hand to hand, literally, as it was, till it became digital. It was a segue. I just wanted to get your view on the Bitcoin piece. But what I want to build on top of that is what you identified early on is essentially with FinFabric was saying, okay, how can we use that underpinning technology to enable financial services, right? So drawing from this blueprint, as it were, of disintermediation or decentralized control, and saying, okay, we can use XYZ properties of it to go into the TradFi world, right? So how have you seen that evolve from FinFabric, where initially it was just like we're building tools, digital tools for trading and the trading side of things, to saying, okay, we can also use blockchain there, to then growing on to once you got acquired, right, and became Hunter, and then going into evidence and then using tokenization. How have you seen the technology evolve, but also business models evolve, if you know what I mean, right? There's been a transition in what could be done, what could not be done, right? We're talking about a few dozen transactions per second when it came to Bitcoin initially, to moving on to 400,000 in some blockchains that you could do as well, right? Which is much higher than what a Visa or a MasterCard does, which is about 40,000 transactions per second. So what have you seen from a capital markets world, in the world that you were deploying, getting your hands dirty and building in a time when it was exciting to be investing in the space, but you're building the shovels rather than going and digging the gold, right? So how have you seen that technology evolve?
Yeah.
I mean, you could say, sorry, I
timing
was
is
going to cut
everything,
here.
I should
Yeah,
say. Right?
I would say 2017, 2018, you would have looked at the number of cryptocurrencies of less than maybe 50, right, before the ICO boom. And now we're talking about, you go to CoinMarketCap, there are about 20,000 plus listed, right? So that's where I want to come in, like what's really changed from that perspective. Yeah.
Timing is everything. So especially in the startup life.
Yeah.
And part of that is luck. But a big part of life in general, and so also of startups is luck. Part of that is strategy.
Sure.
And we were very bad in strategy on that first company.
Okay.
Why? We're stuck in the middle. So there was a lot of activity and things taking off in the crypto native space.
Yeah.
A lot of amazing innovation. And really this first wave of speculative capital pouring into the space, funding a lot of stupid ideas.
Sure.
You need those ideas to drive innovation.
Correct.
It's actually very valuable. And I say stupid with, in the best sense of the word.
No, some of them were. Let's be honest, some of them were. But yeah, I agree.
That's just collateral damage.
Correct.
Not everything will work, but you need that. You need ideas that are improbable to ever work.
Correct.
And then as someone who comes from a traditional finance world, you need to completely drop your hubris, right? Thinking that, oh, but this is not how you do finance.
Correct. Yeah.
So that was one mistake we all made. You have to drop the hubris and really embrace innovation and say, okay, that's interesting. You have to be more interested. I think this is still something I see in TradFi. Just be interested. Look at it. Try to learn about it, because that will change things, and later, understanding it will later help you. Build a better business. So we didn't have that. At the same time, the traditional finance world was not ready. So you're kind of in the middle.
Forget about
you laughed off of stages because the traditional finance people are like, what are you talking about? What is this thing? So that was the situation then. A big reason why FinFabric never made it where it should have made it is timing.
Sure.
And strategic mistakes of not seeing the world clearly and taking a decision to be in one or the other camp. We should have been much more in the crypto camp, in my view. In hindsight, everyone is a genius. So that would have been the right strategy. Anyways, today the world is very different. The DeFi and TradFi world are converging.
Sure.
I have a conversation, and I have these conversations now almost every day with asset managers, family offices, funds, investors of all sorts, issuers of all sorts, because they are our clients at Evident. In a lot of these conversations, and that ratio is increasing even, I come into the room, we don't talk about blockchain at all, first of all, because it's just a technology.
Sure.
And when we get to the point where I explain what role blockchain actually plays and why we use it as opposed to a fast database, and why decentralization is important, a lot of them stop me and say, yeah, I know all of that already. So this topic has arrived. The fact that big players like BlackRock and others are adopting it is really a step change in the TradFi world. You read in the Financial Times, that's what people in the industry do. You read the Financial Times, there is an article every second day on these things now. Tokenization is a big topic. The conversation is very different from what we had in 2017.
Okay.
So that's really fundamentally what changed.
Do you want to give us an example of each? Like if you're going in 2017 to meet a CTO or a CIO, right? What would the conversation be? How, you're talking about the technology, talking about all of that, versus an example what you may have had recently with a potential client.
So, in a nutshell,
Yeah.
Back then you would have spent all the time talking about how this is not crypto.
Sure.
Because we were tech providers using blockchain.
Yeah.
And how these are different things. One side is we could call digital securities, tokenized securities, as they're called today. The other side is crypto or virtual assets, different things. That confusion in itself already was like, yeah, but I'm a licensed financial institution. I can't work with you. We're like, wait, we're not doing so then you're at the end of the meeting, you haven't even spoken about the value you can create with your solution. So you talk about tech and taxonomy. You will sell exactly zero product that way, right?
It was a lot about Bitcoin and blockchain are the same for a lot of people.
Bitcoin and always Bitcoin is all gonna die, and so then you talk about the things that are not about your product. You're not selling, right? And you have to be selling 24/7. That's what I do today. So today it's 24/7 selling about the value that we can provide, about the investment products we have, about how we can help distribute alternative assets to the private wealth investors that do not have this access today. So you really focus on the why.
Okay.
The why. We're talking about tech and the what. Like, you will not sell anything. You talk about the why, you have a chance of selling, right? And then it's the how. Okay, so how do you do this? Well, we're licensed. We're a fully digital platform. We have actually a stack of licenses, so we can do the entire thing. Yeah. And then, that we happen to use this transversal data layer called blockchain. Yeah. That runs across everything. Here is why this is important. So then you actually strengthen your delivery to actually be able to provide the whys and the benefits. It's a 180-degree different conversation today. And then again, timing, right? Everyone in the industry especially evolved from back those years.
I think it's interesting you mentioned about before this question when you mentioned that your clients were like, you already know about the blockchain piece, the tokenization piece, talk about the value that comes in. Yeah. For me, this is a hallmark of Hong Kong, and I'm not saying it's better than the other centers necessarily, but I definitely feel Hong Kong has that high value where, although initially there's pushback, and that was the case also with fintech, we've seen that, right? What technology, fintechs can't do anything with us, to saying, oh, fintechs will eat us up, to saying, oh, let's work with them, and it's just what the world became, right? To the fact that a lot of people in finance in Hong Kong aren't just about running things the traditional way, but they're used to being innovative. I would also use the term creative in building capital market structures, right? Because they're dealing with multiple jurisdictions across the region, different regulatory frameworks, but different needs, right? Hong Kong's not just a finance hub, it has been a shipping logistic hub for the longest time. It also is a big hub for retail and a bunch, sourcing, multiple different industries. So I feel the finance professionals here have a very strong sense of how to structure things, right? And they've been following and keeping an eye on crypto, etc., because that's an alternative investment has gone up, and anything that goes up from an investment perspective is always interesting to everybody in Hong Kong, right? And I feel they've educated themselves well enough now that the conversation is no longer about validating that blockchain can be used for things. It's more like, how can this be made more effective, and what are the structure you're putting? So do you agree with that in terms of when you're having these conversations and structuring, etc.? It's a lot more easier in Hong Kong now, but also because people understand finance so well, it's just about how does the technology underpin that structure, and they're more interested in that fabric of the construction piece of it, right? That's what I would say. Yeah.
Yeah. One of the major reasons why I came here almost 8 years ago is the people. Okay. I think fundamentally what you're talking about is you have a very special level of curiosity and entrepreneurial spirit almost anywhere you look in this place. Yeah. That's what drew me to the place 8 years ago. That's why I'm still here. We didn't have the easiest 7-8 years. Yeah. Right? It is tough for everyone here. The place is changing. Not everyone is happy with it. Not everyone can live with it. And then you have all these, people commenting who are not really here anymore. If you're here on the ground, for me personally, I see tremendous opportunity and value. Although that may for some be a contrarian view, that's where the opportunity is. Contrarian perspective, you only have a chance to create something that has real value in the end. So that also applies to Hong Kong in my view still, although we can talk about this also. We do see this upswinging activity more recently, but what has always been there is that spirit, very clear to me. and I've been in different places in the world, so
Yeah.
top of the world, and that changes the dynamics anywhere, including in the traditional large firms, and including, of course, in financial services, regulated or not, big or small. You see, there's just a different level of curiosity, and so what that means is then people do not necessarily need to be educated as much; they self-educate.
Yeah.
I'm continuously surprised how much people read,
I,
how much they
you
are
know,
on Twitter and
yeah.
they follow things and they are well informed about the latest
Yeah.
because they want to learn. They're like, this is interesting stuff.
And on
I
Finstep Asia Edge
structured
as
my
well.
with you exactly. You know,
Yeah.
I structured my fund always this way. Now you're showing me there's a new way, and then they really want to learn. And of course, that also makes it more enjoyable
Yeah.
to build a business in a place where people appreciate you're doing something new and different. I want to learn about this.
Yeah.
Right? Yeah.
Yeah, it's not just like, okay, well, let's just talk about the deal and finish, right? Let's say, okay, let's structure this, let's make this better. And we also, as you rightly said, Hong Kong's reinvented itself so many times in different ways. And we are at a stage where, broadly speaking, most capital markets are struggling. It's not a Hong Kong China conversation, it's just a global conversation. India's equity markets are probably an exception, and the US blue chips are an exception. But beyond that, equity capital, you're not hearing of too many IPOs, you're not hearing of too many deals. So in this environment, you need creativity, you need newer structures to be able to do effective capital raises, right? At an efficient value and efficient way.
The other thing is, applying the right Zoom
Okay.
is very important, right? You look at this year or 2 years or 3 years and say, this is terrible. And then you extrapolate, everything will be forever
10 years,
terrible.
yeah.
That's not how it will work.
Yeah.
So the right Zoom is 5 years, 10 years. And then you see what are the long-term opportunities? How will things work out?
Yeah.
Right. And so what we are trying to do in that framework is building modern digital market infrastructure. And this plays with, the innovation we do see from the regulators. I'm interested in your view on that, by the way, compared to other jurisdictions. The innovation we see from the SFC, from the HKMA, with the companies that are already here, the depth of the capital markets, the willingness to innovate, as just discussed, provides a unique opportunity to upgrade market infrastructure, in our case, in alternative assets.
Yeah.
And then guess what? That makes the competitiveness of Hong Kong as a tier one financial services hub. It brings it to the next level, right? So those ingredients are all here, and then that's the field you want to play in. And this is why we're here. This is why we're headquartered here. Yes, we have different companies in different parts of the world. We're very interested in GCC
Of course.
region, but that still makes Hong Kong a very viable and valuable place for us to operate.
Look, when it comes to regulators, you've been on the SFC advisory panel, right, for many years before you became a regulated entity, and then obviously had to step down, and now you're a licensed company. It's an interesting thing that not too many people are aware of, in the sense, from a Hong Kong perspective, there's always a lot of industry consultation, right, and engagement of professionals to get their view, right? The SFC FinTech Group launched, 5-6 years ago, has been very active in the fintech world, and now they're looking at digital assets. I remember meeting the SFC team a few years back. This is before I went to Vara, maybe about 4 years ago, and they were. This is a team which is talking about how one of their colleagues had been part of an international organization, without naming the organization, but was out there essentially to understand in depth about what's happening, how the regulations can be built, and he's part of the core working group in this multilateral organization, right? Regulatory organization. So you could see that there is an interest. I've always said this. I think the HKMA is one of the most innovative, positive regulators in the world. They're forward thinking. They had the 7 smart fintech goals, about 7 years ago, and now they're looking at the next round of their fintech and digital strategy. But they've been involved, like Hong Kong. I mean, HKMA is probably one of the first in the world as a regulator to recognize Bitcoin, and they called it a digital commodity at that stage. It's 2013, 2014, right? Very few countries did, or jurisdictions did, as were the case. And then now as well, it's been an approach of let's understand this, let's put people into it, right? They've been looking at CBDCs, both wholesale as well as the Enbridge project. So I do feel Hong Kong regulators have been very positive about digitization in general, wealth tech, fintech, insurtech, and now we're looking at that growth when it comes to real world asset tokenization, the blockchainification of finance, as I call it, and yes, virtual assets as well. And the virtual assets thing, I think it's going to take a little more time as an evolution of understanding market risk when it comes to trading and the retail side of things. So, what is the first step of the VATP licenses? Is it's a good step. It provides a structure for companies to get licensed, and then you build on opening that up to the broader market as you go and more people understand. Because even for those of us, I remember telling you this a few 3-4 years ago on WhatsApp saying, the amount of news and things that are developing, we are guys who keep up with it regularly, and we are struggling. We were struggling at that time to just stay track. Most regulators are coming from legal, finance backgrounds, have a day job, which is completely different to being in touch all the time about innovation. And when there is such rapid innovation development, it is more challenging, right?
Yeah.
Long story short. Now, I want to come to talking about this and talking about you setting up Evident as a licensed entity, right? It wasn't a conversation of, hey, I'm going to build another company which is just looking at the technology end of it, so doesn't need licensing, versus saying, I'm going to build a licensed platform in a space where the regulations are still evolving. Hong Kong being among the early ones in the world, kind of build a framework for regulations, digital securities and the upgrading of license, as were the case. Why did you choose that path, and what are you offering to potential clients? And I may add, this is not investment advice. We are understanding what FinFabric does, and please do your own due diligence before you look at any private markets.
So first, connecting back to the regulators and your comment there. Yeah, I saw this from the inside, as you said, serving with pleasure on the fintech advisory board of the SFC as the only startup really on the board for years. And so I've seen that story in the art. And it's very easy to criticize regulators. The job is very difficult.
It is.
How do you strike the right balance? As you said, the world is moving very fast, particularly in the Web3 broader space.
Yeah.
You have to keep up with things. Every day something changes. Then your job is to protect investors primarily, but also to have an orderly market, but also to allow and maybe even support innovation. How do you balance that? It is very tricky. So I respect anyone who gets close to striking the right balance, and I think in Hong Kong we're very close to that. Yeah. Of course, you can always say there is room to improve. There always is anywhere, and so that's where the dialogue is so important. And this is what I think, as you alluded to, makes a big difference. The doors are open. There, you can very easily have a dialogue with the regulators. These are not ivory towers, and so this, I think, if you want to say competitive, but this makes the regulatory environment competitive on a global scale, and so that is a great quality and strength to have in Hong Kong. Again, with all the things that we still can improve on and are moving too slowly and all of that, but relatively speaking, you having seen other jurisdictions, I have seen others, we have a very competitive setup here. For Evident, yes, you're hitting, right on a very important topic, strategic decision.
Yeah.
As you can guess, or you know it, but as you guys can guess, I'm a very structured guy. So I spent 6 months researching before we wrote a single line of code for Evident, interviewing, reading, thinking, wasting time that you have to for ideas to form. So one part of that thinking process was back to what I said earlier, that decision we got wrong with FinFabric. I'm not going to repeat that mistake. But when I started Evident, basically during COVID, the work was already very different. Mm-hmm. So it was a viable alternative to say, build a long-term licensed business, as opposed to exist in the gray zones, probably move a lot faster, grow a lot faster, at least in the beginning, in an unlicensed setup. Yeah. More in the DeFi side of things. Yeah. The decision was, let's get licensed, because that is the long-term trajectory.
Yeah.
Even DeFi will be regulated. We still live in countries with governments and regulators, so they will increasingly bring in DeFi into regulatory environments.
You had the ISO DeFi recommendations and DeFi regulations last year as well. So yeah,
already happening.
Yeah.
Right? And so if I want, so then you have to ask yourself, what kind of business are you building? It's totally viable to build a 3-year business, make a lot of money, exit, retire. But for me, then starting to kind of make fall over into the 40s, you're like, what am I spending my time on? My most important and valuable resource is time. So it has to be meaningful. What you're building has to have the potential to be big, but also be meaningful. So the answer there is, to me, that's a long-term business. In the long run, all of this will be regulated. And there is already tremendous opportunity in a regulated setup today.
Sure.
Because in a regulated setup, you get to serve the entire TradFi world. There's thousands of licensed entities in Hong Kong alone that when I started, you couldn't easily serve as an unlicensed company. Maybe even today, it's very hard. So you have this entire unserved market that you open up. And then once that decision is taken, you go from there to, what is my licensing strategy? I cannot be in a 3-year process of getting licenses. And what is the stack that I need to build and support the commercial model that I want to define? So it's these interconnected strategic elements that need to fall in place. And once that was clear, it was a go, including on the licensing side.
So, future of Evident, right? What are you seeing, and what are you planning to do, and what can the broader market expect from you guys? What essentially the today and tomorrow of Evident?
Yeah. So it's Evident, we are an investment platform for alternative assets.
Yeah.
And we focus on assets that have high impact. So anything where capital flows to assets and investments that have a positive impact on the world, this is what we want to support. That's sort of our mission that we follow.
Sure.
And that dictates a lot of decisions that we take.
Okay.
As a provider, what we do is we help issuers that can be asset owners or asset managers, digitalize that asset, tokenize those assets for them. So we do the structuring, the tokenization, the issuance, all in a digital workflow, and then help them place these assets with private wealth investors. So if you look at the private wealth space, the exposure to alternatives is virtually zero, with the exception of the super rich. So ultra high net worth individuals, they allocate 20 to 30% to alternatives. Even the next step down, so very high net worth and then high net worth, they're sliding quickly to zero. Why? Because this industry is so inefficient that it's unprofitable to serve people who even have substantial amounts of money. So we're still at that stage where it's very easy for us to create 10x level of efficiency.
Sure.
Just because there has been basically zero innovation in this process. So in end effect, we are essentially offering a fully integrated package, structuring all the services involved, like fund administration, accounting, reporting, transfer agent services, all the transactions. We also run a secondary OTC market.
Okay.
So it's essentially that amounts to a market infrastructure, as I said earlier. And our focus is on essentially scaling up on both sides, because by nature we act as a connector, as a marketplace.
Sure.
And what you can expect from us is our focus right now is on the distribution side. We have tremendous demand on the asset supply side. So high quality issuers, really global top issuers coming to us and say, okay, you're basically one of the very few guys in Asia who can run a licensed setup in a tier 1 financial jurisdiction. I want to tokenize this and that and that. We are way beyond capacity on what we can do. So we're not so worried about high quality deal flow and supply. So what we're focused on is building our partnerships on the distribution side.
Okay.
We have a very clear strategy there as well. So second half of this year, which is already well on the way, it's going to be all about that. And there will be one announcement after the other of partnerships we're forming, integrations that are happening, new assets that we're launching. So we're now getting into a more structured way of execution. whereas the last 2 years were really foundation building, pretty much heads down, not being very public about it. So that's sort of our go-to-market phase that started with mid-year change 2024.
Nice. And I'm looking forward to that. One of the questions I want to ask before we end is the conversation which a lot of people mix up on fractionalization versus tokenization. Right? And I would love for you to expand on the two in terms of how they differ.
Okay, so for me, fractionalization is an effect of tokenization, right?
Yeah.
Fractionalization in itself, to me, is not enough. You go out and say, I'm fractionalizing assets. That's not a very strong argument.
It's a lot of people in alternatives who want to talk about fractionalization for liquidity.
So if we had a conversation, then, okay, so why do you use blockchain? Why do you make the asset digital? That is one argument.
Yeah.
What fractionalization really means is we're able to create small and minimum tickets for investing into an asset. Our platform can serve investors at almost zero marginal costs. So I can place an asset even at a $1 denomination. And we can even place fractions, right? So you have a lot more flexibility. So yes, you can fractionalize the asset. What that means is much smaller minimum investment participation in fairly large assets. We did large assets like $100 million LNG carrier. That asset already exited, by the way, was a great success. And we brought down the minimum investment, which is 10 million usually, institutional participation, to 10,000 Hong Kong dollar equivalent. Right? You could bring it down even further because technology takes away the inefficiency, and then it's more a strategic and a business decision. What is the minimum commitment I want to see? So that to me is that under the umbrella of fractionalization is one effect, one benefit you get from digitalizing the asset. Once you have a digital asset, you can digitalize the processes, and you can automate these processes, and then costs come down, and then you can offer smaller tickets.
Yeah, and I agree with that. I think it's this conversation on fractionalization versus tokenization, which is you could fractionalize a liquid product, which is typically accessible to those with deep pockets, and provide access to those with potentially lower levels of investment ability, or those want to take smaller exposure. Versus even if you fractionalize a very illiquid product, it's not going to necessarily become liquid because there's no interest.
And those are very different concepts, by the way, right? Smaller units and fractionalization has nothing to do with liquidity. It is the foundation, the technical foundation for liquidity. Like in our case, a secondary market, basically zero transaction costs, marginal costs of serving additional clients. That's the foundation. That's not liquidity. Liquidity still comes from the interest of investors saying, I want access to that asset, and maybe having a counterside that says, yes, I want out of my asset. That's where liquidity comes from. And of course, you can create it with market makers and others. All of these things we will see because there is good business to be made. So they're still relatively early in terms of seeing this promise of more liquidity from tokenization, but the direction of travel is inevitable. Of course, we see more liquidity because people don't want to be locked in for 5 years, 7 years, 10 years. We see tremendous opportunity in private equity, secondaries, things like that, that are already so offers are already there in a Web 2 setup. And with blockchain, to me, you bring it to the next level. Web 3 approach, you can offer better, more efficient secondary markets for this type of assets. It's an evolution, less a revolution. It's more an evolution of things we've already seen. As you said, already, so assets that are already electronically traded, I don't usually see the purpose of tokenizing them. What's the point? It's maybe making them accessible to investors who only operate on the crypto side or blockchain, okay? But other than that, these are already very efficient, very liquid markets. This is why we focus on alternatives, because they are not efficient and they are not liquid. So the opportunity to create value is just so much higher. And again, with the value, this is where you sell.
Fair enough. And this has been a very valuable conversation, understanding about Evident, but also the evolution of tokenization and blockchainification of finance. Thank you so much for taking your time. As always, a pleasure. And I'm always learning when I listen to you talk. So thank you for joining us on Finstep Asia Edge podcast.
Thanks a lot.
Thank you. And audience, stay tuned for more interesting, in-depth conversations on Web3, fintech, and digital assets on our website, YouTube, and our LinkedIn pages, other social media as well. Click like, subscribe, and follow us for more of such quality content. Thank you so much.